Hey everybody, welcome to another edition of Tuesday Talks with Ashley Hanna and Angelo Datseris, your Charlotte metro area real estate experts. We can help you with all things buying and selling a home, and Angelo is our expert for all things home financing. So today we have a really interesting discussion, I think, and we're going to talk about some of the headlines that I've seen in the last few days about has the real estate market peaked and what that means. So as always, feel free to drop any comments and we will try to get to all comments and questions during our show. And give me 1 second while I wait for Angelo to hop on with us. Hey,
Hey Ash, what is up? Why is
how's
that
it going?
it's okay. It's going. Why am I so
Blurry?
yeah.
I feel like you should wipe your lens.
Yeah, I probably should. That's weird. I just tried to do
use
it.
my shirt.
Well, let me see here.
There she is.
Look at that. What
Yep.
a difference. What a difference. All right. Okay, sorry about that.
Hey, that's
Sorry
okay.
about that.
So how's it going?
It's going. It's going. You know, just trying to navigate and you know, just you know, just trying to get stuff closed.
I hear you.
In a timely fashion, getting stuff knocked out. It's been kind of crazy busy. We've had a bunch of closings in the last couple days. You know, I had had my personal closing as well. So it's yeah, just rocking and rolling here.
So I already have a few things that I think we should talk about. And one of them is today, this morning, and yesterday, I saw some headlines, and it was like, you know, basically the market is peaking here, and it's starting to decline. And it was funny because I went on a walk in my neighborhood yesterday or a couple days ago, and somebody pulled me aside and was like, should we, they're thinking about selling in a few months, but they're like, should we just go ahead and do it because we heard that the market is changing? And I'm like, first of all, I went ahead and I pulled the stats for this past week, the most, recent MLS stats. And it said for the Charlotte region for the week ending in July 17th, inventory decreased 45.6% to 3,824. So, and then I looked at where we were at that week a year ago. And we were at just over 7,000 houses a year ago. So wow. I don't, and right now we're at 3,800. So like, I don't know, like, I think maybe in some markets they're seeing some peaks and valleys, and I think as we roll into the school year, we're going to start
right. It's going to slow down a little bit because, yeah, once you kind of get over that hump about getting into the new school district and stuff like that, then yes, yep. So I agree with you 100% on that.
I don't like if it were me, I'm not going to rush to sell my house. Like if I have a plan that I need to, for whatever reason, whether I'm building a house or whatever, I'm not going to rush to sell my house and then be in some place to rent just because I think that I've heard a headline that the market's declining here in our area because I just don't see it at this moment.
No, I agree. Yeah, no, I agree. I mean, there's, I'm not seeing that. And everybody that I'm dealing with, client-wise, agent-wise, stuff like that, I'm not seeing that there's a decline. It's still an inventory issue, still a shortage, still you can't find can't find, houses. And if their houses does come on the market, then it's highest and best and multiple offer. And so I'm not seeing that.
Right.
And this pocket of clients that I'm dealing with, of course I'm not in South Carolina and stuff like that. I'm mostly Charlotte metropolitan, so I'm not seeing that.
Right. And that's what we're speaking to. I think as a frame of reference, yeah, we both look at national headlines, but we can't speak to all markets because real estate is local. Like,
right.
What you and I do every day is largely based on what we're seeing in our local market.
Yep.
And then I saw another headline that was in the REALTOR magazine that I get, and it said 20 cities with the most severe housing shortages. That's the headline. And then it says, let's see, it says this. So they analyzed the 50 largest metro areas to identify the markets with the biggest housing deficits. Phoenix and Dallas topped the list with the biggest housing shortages. Cities in the southern states tended to have the largest housing shortages, according to the study. And you want to know where Charlotte ranks?
4th.
In cities with the biggest housing deficits.
Wow.
Isn't that crazy?
Yeah, I mean, there's a lot of people moving here. I'm talking to, there's a lot of people on the West Coast, California, San Diego, Silicon Valley, San Francisco. There's so many people flocking out here, taking jobs out here, working remote and able to work remote, and just the prices, they're able to get so much more out here.
Yeah.
And so I'm seeing a ton of that, more so than I've ever experienced.
Really?
Yeah.
That's
and investment properties too. They're looking for investment properties, looking for second homes. I have people in Colorado that are looking for second homes on the beach, like Charleston.
Yep.
Out in the North Carolina beaches as well. So it's a lot of people flocking out here and wanting to move out here because the house prices are so they're phenomenal now because comparatively speaking to out west. So it looks like we're creeping up there. So
yeah, I do think the other thing, and I wanted to see what your thoughts are on this. The other thing that was included in the Canopy weekly update said that cash buyers continue to make up a significant portion of the U.S. housing market. Nearly 1/3 of home sales this year being all cash purchases. Although investors make up a considerable number of cash sales transactions, the increasing availability of remote work has allowed homeowners to, what you're saying, move to less expensive markets.
Yeah, and it's funny you mentioned that too, because the client that I had spoke with yesterday, as a matter of fact, was in San Francisco, and their real estate agents out there told her, because she's a first-time home buyer, like, if you don't have a cash offer, forget it. In out west where she's living, she's like, if you come with financing, you're not going to win the bid if it's not cash.
Oh my
I could
gosh.
not. I was like, are you kidding me? Like they're advising you that they're saying that you're never going to win an offer with financing. She's like, yeah. She's like, what's going on out there? Like, am I going to need? And I'm like, no, absolutely not. You're not going to get. So that's crazy to hear that about different markets, and the price, the prices there are what, 3 times, what they are here, 3 or 4 times what they are here. Right. So that's just crazy to me. It's crazy.
Like $700,000
in cash. Right.
I'm like, wait, we're in the wrong line of work.
Right. And that's the truth.
I can't even imagine that. And then, not to mention, everyone has different schools of thought on this, but you're sinking all that liquid cash into a asset that's not liquid. So
right. Yeah. That's the, the cost of money too. If you can get a rate that's in the 2s, maybe you want to put some of that money somewhere else where you could get potentially more growth or more investment, to a 5 to 8% return. You know, real estate's always going to be more of a solid return, you know, than investments, because of course investments go up and down. Real estate does too, but not. You can always rent, you know, rental properties. You can always rent that real estate out. So I don't know. It depends on your school of thought when it comes to that. Like for me personally, I don't want to have any debt. So I'd want to get out of debt and be debt free as quick as possible. Whereas some other people want to kind of harness, you know, I guess some, you know, a school of both. I like, you know, I like lower payments. I like lower debt. So I want to get out of debt as fast as possible. You know what I'm saying? So if it was me personally, I see, you know, reasons for people that do both ways. You know, they just want to, you know, get it paid off as soon as possible and just, and not have any debt. But I also see the, you know, the school of thought where don't put as much money down and use that money for something else. So it's all on your comfort level and how you feel that, you know, about your situation.
And me,
you know, everybody's different.
My husband, James, has your school of thought, and where he's, you know, he's like, no, let's like pay off the house. And I'm thinking, why would we take that? Why would we just sink all the money into our house when it's so cheap to just have a mortgage on it? And we can take that money, you know, that $200,000, put it over here and get a 5% clip, right?
Right.
And so, you know, I think it's funny because it is to each is their own. And I think the closer you are to retirement, the closer you are to, like, there's obviously tons of things. Nothing is a sure thing when you're talking about investments and all that. But I just I was floored with the cash thing. Like, I just don't understand where all this cash is coming from.
We didn't get into a ton of detail about, you know, if it was mainly investors or anything like that, but she specifically said, if you don't have a cash offer, if you need financing, she's like, you are not winning that bid.
So is she getting an investment property here?
No, she's moving out here. She's like, I'm out.
Awesome.
So yeah. So she's coming out here and gonna start looking for a place. So
I would be interested to see, and I need to like dig into some of the census stuff on what, you know, the average daily rate of people moving to Charlotte is, right?
Right.
Because that'd be
interesting to know.
A couple years ago, I feel like it was like 78 or 117, something like that, somewhere in there.
Right.
And so I'd be interested to see where we are now.
Yeah, we could take a note. I'm gonna take a little note. We can talk about that next week.
Yeah, that's a good idea. But you know, I think that pretty soon we're gonna start having to talk about affordability. I mean,
correct. Because once those rates tick up just a little bit, you know, it's gonna put some people out with that affordability, and it's definitely gonna slow things down once the rates do come up. You know, with you know, once the whole Delta variant thing came out, you know, last couple of weeks with. I think that was a contributor because the news headlines over the weekend was about the Delta variant and COVID, things like that. And so there wasn't really anything pressing rate-wise that would cause the rates to kind of take that downtick, but they did. And they're still kind of floating around those levels. I mean, rates are phenomenal, like unbelievably low right now.
Where are you seeing them sit right now?
You know, good credit, 20% down, let's say 300,000 loan amount. You're going to be in the range, I'd say probably high twos with the APR of like a high twos. So it's crazy. Yeah.
So maybe like right now, while they have dipped, like you should be refinancing, like if you're not planning on moving. And
yeah,
right?
and I actually did. I was working with Andrea, my other teammate here. She's been with me for like 17 years. We were talking about she wanted somebody was asking her for a quote for a no closing cost refi versus a closing cost refi. You know, and she was, because we had quoted her, the best interest rate that we had. And of course, it had some cost to it. There's nothing that's no cost. She's like, well, there's other people offering no cost refis. I'm like, there's always a cost to it. Okay. Nobody works for free. So, so we had to kind of put it on paper for like, yes, we can do a quote unquote no cost refi, but it's technically costing you, but we're building it in somewhere else. So we basically did a comparison of a $300,000 loan, right? It was $300,000 loan amount with a closing cost version versus a no closing cost version, right? The closing cost version, it was, the rate was around the 2.6, 2.7 APR range, right? The one that did not have any closing cost, it was around 3 1/8 range, right? On a $300,000 loan amount over 30 years, what do you think the difference would be cost-wise over the life of the loan? Take a guess.
10,000.
30. $30,000 because the difference in rate, the higher rate to offset all those costs over the life of the loan. So it is not smarter to have a no closing cost to roll everything in. It just doesn't make sense.
So for 300,000, what the average closing cost for that for a refi is what? I mean,
we're like 2,500, 2,800 total with appraisal if we needed appraisal. So we upped the loan amount too on that. So it was about $30,000 difference between a closed cost.
$3,000 is going to cost them $30,000.
$30,000 over the long run. Yeah.
That, Angelo, right there is, I think, a big situation that people don't understand.
They don't. You hear all these advertisements on TV like, oh, no closing costs, refis. You can refi. Nobody works for free. No one works for free. So why do you work for free?
No.
Do I work for free?
No.
And I'm sure they don't work for free either. They like getting a paycheck. So nobody's going to work for free. Or if they are, they're just not going to be in business very long.
Yeah.
And so there's always a cost to it. We can always, look at the differences. There may be some reasons why a no closing cost option would be better for that person but this particular scenario, they're going to stay long-term. They wanted no costs. We just had to put this like, all right, let's, let's just do the math on it. Let's just
Let
do
me
the
just
numbers.
put it black and white for you. Pull the board and you can see.
Yeah. So, so that was interesting to see on a $300,000 loan amount. Yeah. So
I think that, Angelo, people get really when it's talking closing costs has always been a thing, right? And people hear headlines all the time, with commercials, either no closing cost or lowest rate guaranteed, and I'm like, it's a slippery slope.
Yeah.
And if you're not having somebody go through those numbers with you and explain why maybe it can be classified as no closing cost, or why it's the lowest rate, or whatever, then you're doing yourself a disservice. And that company is doing a disservice to the consumer.
Right. Yeah. But there's many people that like immediate gratification, or instant gratification, immediate gratification. They just want to, it doesn't cost me anything. And so it's just, we just have to kind of put it on paper for them and let them make the decision. Like, hey, this is, it was an obvious choice once we put it on paper for them. Like, oh, wow, we're not going to want to do that. So
$3,000 today or $30,000 over the term.
Right.
Hello?
Right. Because it not only, it increased the mortgage payment. Of course, that's where the interest came from. So it's just having a knowledgeable conversation, and when someone comes to us and asks us about we hear, there's other places that are offering no closing costs. We're not going to, we don't. And that's where you should come in and say, all right, yes, there are companies that are offering no closing costs, and this is how they do it. Okay, this is what they're doing to offer you that, and this is going to be how it negatively impacts you over the life of the loan. it's just, you know, informing and just providing that value. And it's up to them whether they want to take it or not.
Yep. Yeah, agreed.
You know,
you know, and I think that, you know, I'm all about knowledge is power. So I just think that the first conversations I know that you have, the first conversations I have are, you know, here's what this loan looks like. Here's some comparisons. My conversation is, this is the market that we're in. This is what I'm seeing. This is, if we're buying, this is what it's going to take to buy. Right. If we're selling, this is what it's going to take to sell. And just being able to communicate it, explain it, and like have the other party understand is crucial. And everyone thinks that this market's so fast, and it is fast, but make sure that you are getting the information so you understand what path you're on. Right,
exactly.
But
just want to say hi to a distant friend over there, Vali Jen. He is my buddy from Greece, from Crete, Greece. He's my family's one of my family's friends. So thanks for joining.
Oh, that's so
all the way
cool.
From Greece.
What time is it in Greece right now?
It is 8 o'clock right now, 8:30.
In the evening?
PM. Yep, they're 7 hours ahead.
Okay, so. Very cool.
Yeah.
Very cool.
But yeah, I know we kind of got off on this, but I definitely have a couple topics to talk on next couple weeks for Tuesday Talks. We can talk about single member LLCs, COVID P&L bank statements, short-term disability. But yeah, I know we can. That all those are going to be pretty long discussions, so I don't want to take up too much more of.
Yeah. What should we? But, okay, so let's nail down what we're going to do next week.
Let's do short-term disability, because I know we've talked about LLCs and stuff before, but we could talk about short-term disability next week.
Okay, perfect. And how it affects like your ability to borrow? Correct.
Yeah, and the requirements needed if you're on short-term disability, the requirements needed to, you know, for the loan to be sellable to Fannie Mae if you need to use that income to qualify. So there's some guidelines that that you need to prove when you're on short-term disability about how, you know, just about the length, longevity, the amount, and all that. So yeah, we can definitely talk about that next week.
Awesome. Well, cool. I think that'll be good. Oh, I did too want to mention something, another headline that I saw real quick. It was about lumber pricing.
Oh.
And like we saw a correction happen with lumber in the last few weeks, right? So it kind of leveled off, the pricing did. But the wildfires are now causing it to go back up.
Oh, no.
So I thought that was interesting because I didn't even think that, yeah, of course, wildfires, they're burning trees, which is lumber. But like, I don't know why, like making that connection, I was just like, of course, you know?
Right.
And that was the first time I really like thought about it in that context, that could also be a cause of the pricing increases.
Yeah.
Just interesting.
Yeah, you don't really think about that. You know, lumber's burning.
Yeah, literally. Yeah. It's on fire.
Right. Yeah. Well, cool. Yeah, we'll check back up. I'm going to make a note to do lumber prices today, and then we can check next week before we hop on the call.
Yep.
About what lumber prices are, if there's so much movement in that, and then and then short-term disability. Cool.
That sounds good. Awesome.
Well, cool beans. Awesome as usual. Love hearing this info. I love having this little chit chat with you. And please, if anybody's looking to purchase real estate, needs just advice on home value, what the market's doing, all that, Ashley is your girl. And if you guys have any questions about financing, rates, payments, you know, all that good stuff, I'm your dude.
Right.
Like us, follow us, share us. We have our YouTube channel on Ange and Ash Tuesday Talks. So this will be uploaded to there shortly, and follow my channel on YouTube as well. It's just Angelo Datseris Leverage Lending Group. Follow Ashley at Ashley Realtor, and follow me at CLTMortgageguy. We will see you next week.
Bye.
Bye-bye.